What's up everyone, it's Kadi with Money Investing. So we got another crazy week coming up filled with earnings and of course a lot of economic data, including the FOMC minutes and the GDP numbers and the consumer sentiment. All of that is going to be scheduled for this upcoming week. So as always, if you enjoy this video and find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. There is a 16% annual discount available till the end of this month, so another 8 days with limited spots available. And after that, the discount is going to go away. So link's going to be down below if you want to get access to all the buy and sell alerts, options alerts, trade ideas, swing trading ideas, and of course a lot of private live streams and private benefits as well. So talking first about the earnings calendar, we do have quite packed schedule with a lot of companies reporting, and some of my favorites are going to obviously be Palo Alto Networks, Nvidia, Costco, Intuit, all these companies, UiPath, Zoom. So there's a lot to go over, and I will be doing a lot of videos in the upcoming week, either before earnings or after they're already released. So Zim Global Integrated Shipping, they are reporting before the markets open tomorrow. It's going to be quite interesting because this is a company that has had a very much of a roller coaster ride, gone up and then come down. Then we've also got Zoom after the bell. That's a pretty big Cathy Wood stock, so we're going to take a look at their earnings. And then on Tuesday, it's going to be a very retail week as well because we do have Lowe's, we do have Dick's Sporting Goods, we do have BJ's, we do have Costco. Some of these companies that will again tell us a little bit more about the retail spending habits and the current strength of the US economy. So Lowe's reporting pre-market, we got Dick's Sporting Goods, we got BJ's, AutoZone, another very, very strong stock here. And then after the bell, we do have Palo Alto Networks. I already did a video on this company, so make sure that you do check that out if you haven't already. We have Intuit reporting after the bell. Agilient Technologies is also reporting after the bell on Tuesday. And then on Wednesday, we've got Analog Devices, Kohl's, XPeng, and that's pretty much going to be it. Abercrombie and Fitch, Petco, and then the big stock, Nvidia reporting after the bell. I've already done a video on them, so you can check that out. Then we've also got Snowflake, we got Digital Turbine, we got UiPath, and that's pretty much done for Wednesday. And then Thursday brings Best Buy, Dollar Tree, Medtronic, TD Bank, Burlington before the bell, and after we got Costco, Autodesk. Autodesk is also quite an interesting company. We got Ulta, and we got Workday, and also Gap reporting after the bell on Thursday. And then finally on Friday, we only have Big Lots that I'm particularly interested in, but it's still going to be quite an interesting week because a lot of these companies represent a lot of the market in terms of retail, in terms of technology, in terms of semis. So I'm going to be definitely paying attention to a lot of companies here that are reporting, and I'll be doing a video as well. This right here is the economic calendar. So starting with Monday, we do have a couple speakers. So James Bullard talking once again. We got Thomas Barkin, we got Mary Daly. So they're going to be talking on Monday, and the market could be volatile based on what they say. Lori Logan is talking at 9 a.m. Eastern on Tuesday. Then we do have the new home sales, Richmond Fed Manufacturing Index, the PMI Composite Flash. And then, of course, Wednesday is going to be the big day when we have the FOMC Minutes. It's going to tell us a little bit more about what was discussed in the prior meeting, whether we were expecting a pause, and what was discussed related to the pause, a cut, or a hike. All that is going to be coming out on Wednesday at around 2 p.m. Eastern. So that's going to be the FOMC Minutes. And of course, we got the MBA mortgage applications every week. GDP numbers, very, very important for the first quarter, 23. They're coming out at 8:30 a.m. Eastern on Thursday, along with jobless claims, which also obviously come out every single week. Susan Collins is talking. And then finally on Friday, we've got the durable goods order, personal income and outlays, and consumer sentiment coming out at 10 a.m. Eastern as well. So it is going to be quite an interesting week here. And GDP numbers quarter over quarter expected at 1.1%. So again, there's a lot of expectations for a potential recession in the US. And if the GDP continues to be very strong, right, those recession considerations or anticipations are going to start to come down. But what I mentioned before is that the only reason for the Federal Reserve to actually be cutting rates, right, if there's an incentive or if there's a motive for the Federal Reserve to cut rates, is that they need something to break first, right, in order for them to fix with the rate cuts, right? It's not like they're going to do it just for the sake of it. They need something in order to justify those rate cuts. And those rate cuts can be justified through three things: a recession, a crisis, or deflation. And we don't have any of those. So again, I'm not saying the Federal Reserve can't cut rates. They obviously can if they wanted to. They have all the power. But I'm just trying to understand and help you understand the motive behind the rate cuts, right? I'm trying to get inside Jerome Powell's head and what is he actually thinking in terms of the markets and in terms of the economy. What I really see, or what I think, what he's probably thinking is that inflation's high. We don't have a recession. We've got a really, really low unemployment number. GDP is still expected to come in strong. So there's no reason to actually be cutting rates because the economy still can handle it, right? And inflation is on its way lower. So they're kind of doing their job and they're banking on the soft landing scenario to continue to play out. So again, we're going to find out, what happens eventually and whether the market's right or Jerome Powell's right or the Fed is right. And then, of course, next week, we're going to learn more about the GDP numbers, the consumer sentiment, and then, of course, FOMC minutes as well. So this right here is going to be the entire market. So NASDAQ here had a very strong week, up over 3% this past week. So incredible move to the upside. And the next target and that resistance is going to be at 13,200. So this right here is going to be that level to watch for the NASDAQ, and support level is going to stay put somewhere around 12,250. So those right there are going to be some levels to pay attention to. And we got a resistance, like I said, at 13,200, the next target, and that's gonna take another 4 to 5% for the Nasdaq to get up to that level. But we also have to remember that this leadership has been very, very narrow. We're still kind of looking at just a handful of companies that are actually moving the prices higher, and NDX, which is Nasdaq 100, has already broken past this resistance, right? So this was coming in since February or actually July of last year, and you'll notice that we're already starting to break out above this level. And the reason is why? Because again, Nasdaq 100, 40 to 50% of it is just made up from just a handful of companies like Nvidia, Amazon, Apple, and they're the ones actually moving higher. Talking about the S&P 500, so still very strong week last week, 1.65%, and it's now starting to break a little bit to the upside. 4,200, very, very strong resistance, and a break past that level can put us on the way to 4,300. That's going to be that next target to watch, a 3% move to the upside for the S&P 500. So hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And like I said, there's going to be quite a few earnings coming out. I'll be doing videos on them before earnings or after the earnings come out. And then from an economic calendar standpoint, like I said, we do have FOMC minutes. We do have the consumer sentiment, the actual GDP numbers, and that obviously is going to tell us a little bit more about the strength of the U.S. economy as well. But the markets overall, very, very narrow leadership. We are starting to see a bit of a broadening out session here. So last week we did see some other sectors broaden out and some other sectors also rally. But I think it's really going to come down to whether tech can continue to rally and other sectors can catch up. If not, then we're going to probably see a rotation because there's either got to be new money that enters the market, which takes the other parts of the market higher, or we see a rotation out of tech over to other sectors. In that case, the market just trades sideways or even goes down. So that's where we are. So I hope you guys enjoyed this video. As always, happy investing. 16% annual discount available till the end of this month down below if you want to join our Discord and our Patreon as well. So always happy investing. I'll see you all in the next video.